It's becoming the new introduction to this show. There is a record in gold. Welcome to the Northern Miner Podcast. My name is Adrian Pocobelli. We are at $2,932.50 per ounce. US, which these days, if you're in any other currency, is even more impressive with the run on the dollar that we've seen. So you're doing pretty well. If you've been in gold, the gold bugs get their say. I mean, knocking on the door of $3,000. Interestingly, silver at $32.34. I mean, there is a bit of a catch-up move that often happens with silver, a delayed reaction. However, part of the rationale of what's going on with the gold price is the uncertainty around tariffs, and the tariff discussion is back. I feel like as observers, we're all going to learn in the next 4 years if tariffs work or not. I think we're going to get the real test because it seems like, 1 week it's on, the next week it's off, and then here we go again. There does seem to be a need to test out this theory from the White House's perspective. It really wants to see, if it works. So it'll be interesting to watch. I think we're going to get a real answer here in the next 4 years, and it'll be also interesting to see if this is going to be a shared prosperity, or as the, free traders say, is this going to be a beggar thy neighbor policy where you're always just trying to get a little bit better of a deal from your neighbor for yourself? Does that work? I guess we're going to find out. So again, a new record in gold, soaring past $2,900 on new tariff threats, according to a staff writer at mining.com. And in that article, we have a quote from Merrick's analyst Edward Meir, who said in a note, quote, "Obviously, the tariff war is behind the rise. It just reflects more uncertainty and more tension in the global trade situation," end quote. Jeffrey Christian, as I always like to say, his radar goes up in overstatement. Obviously, is a big claim as we try and attribute cause to this change in the number of the gold price. We have another quote here. This one's from independent analyst Ross Norman, who told Reuters, quote, "Gold is very clearly targeting the $3,000 level, and the market is incredibly strong, almost relentless. Now it is only a question on when it will scale the level and not if it will." So to me, this is actually a more persuasive argument than the tariff threat. The tariff threat doesn't help. Put it this way, I would say it fits neatly into the thesis of gold going up. But the more I follow the news, the more persuaded, frankly, I am by the technical analysts. And the reason why I say that is because they seem to be right the most. It seems to me more this is about, okay, we got to hit $3,000 and then we'll maybe bounce off of that resistance and we'll go down a bit to consolidate before we once again test $3,000 and go higher. In a weird way, like that narrative in my mind is equally persuasive, if not more so. So apply what narrative you will, apply what story you will as cause. For the most part, we don't seem to be in the land of science here. And finally, just from Ross Norman here on the gold price, quote, "One should expect to see retracement on profit taking, but we never do, which reflects the underlying momentum is very, very powerful," end quote. And then finally, we have Exinity Group Chief Market Analyst Han Tan in this wonderful summary article by, again, staff at mining.com. Quote, "With the PBOC, or the People's Bank of China, resuming its bullion purchases in January, along with China's decision to allow insurance funds to now invest in gold, such moves also appear to bolster bullion's bullish momentum," end quote. So all sorts of reasons, but what we do know is the price is the price. And we are knocking on the door of $3,000, and perhaps we could say on uncertainty, which perhaps is a more understated way of expressing cause. So onto this tariff threat. Again, we seem to have the on and off tariff discussion. It's quite interesting. I mean, strategically, if you look at what Trump is doing, it seems to me that part of his strategy really is to create chaos. Like that is the strategy. And then within that chaos, new things can happen. But first, you kind of got to break those kind of ossified mental structures. I'm not saying it's good or bad. As I was saying at the beginning of this program, like, let's see where it leads us. I think, for example, shaking things up, causing chaos with the intention of putting tariffs on, I mean, you do get the sense we're going to get a sense of the effectiveness of tariffs. So let's look at these new tariffs. New U.S. steel and aluminum tariff rates take effect March 12th. Executive orders show. It's amazing what you can do with these executive orders, isn't it? So this is Reuters via mining.com. New 25% tariff rates on steel and aluminum imports into the United States are due to take effect on March 12th, according to executive orders signed by President Donald Trump on Monday. A U.S. official earlier said the new rates would take effect on March 4th. The full text of the orders were not released for several hours after Trump signed them. And this was one of the big complaints that Canada had on the whole tariff discussion less than 2 weeks ago, which was, we haven't even seen anything on paper here yet. So interesting there. And we have another headline. EU and Canada condemn Trump move to hike steel and aluminum tariffs. This is Reuters via mining.com. The European Union and Canada said on Tuesday they were prepared to hit back after U.S. President Donald Trump decided to impose tariffs on all steel and aluminum imports, escalating fears of a trade war. Now, the reason I'm focusing on this is because I was suggesting as recently as, I believe, last week, that the reason Trump dialed back, and I would argue actually backed off the tariffs, was because of what we saw from Chuck Grassley, the Republican longest member of Congress, who was imploring the president to not put tariffs on potash for the farmers. And then we also had a letter from the Aluminum Association in the U.S., which was basically saying this is going to cost a lot of jobs in manufacturing. And I was suggesting that's why Trump backed off. But I mean, if he's back here a week later and saying we're going to put 25% on aluminum, maybe the Aluminum Association wasn't the cause. Now, just a couple more paragraphs on this EU-Canada response. Trump signed proclamations late on Monday raising the U.S. tariff rate on aluminum to 25% from his previous 10% rate and eliminating country exceptions and quota deals, as well as hundreds of thousands of product-specific tariff exclusions for both metals. The measures, which will take effect on March 12th, will apply to millions of tons of steel and aluminum imports from Canada, Brazil, Mexico, South Korea, and other countries that had been entering the U.S. duty-free under the carve-outs. Speaking during a visit to Paris on Tuesday, Canada's Prime Minister Justin Trudeau called the tariffs, quote, unacceptable, end quote. European Commission President Ursula von der Leyen also condemned the decision, saying the 27-nation bloc would take, quote, firm and proportionate countermeasures, end quote. The move will simplify tariffs on the metals, quote, so that everyone can understand exactly what it means, end quote, Trump told reporters. He continued, quote, it's 25% without exceptions on exemptions. That's all countries, no matter where it comes from, all countries, end quote. Now, interestingly, if you look at steel, China controls about 60% of the steel processing of the steel market. And the next 10 countries combined don't add up to 60%. So, with that in mind, you think about what's going on here. One could imagine, maybe Trump putting even a 50% tariff on Chinese steel. One could imagine doing that in order, say, to bolster Canadian and Mexican steel imports as a way of kind of counteracting China. And then you look at these tariffs put across the board, 25%. I still imagine that China still has the cheapest steel. If we're trying to figure out what's the strategy here, I suppose it's for the U.S. to attract steel production into the United States. So, again, I feel like we're really going to get a sense on how effective tariffs are in the coming 4 years. I mean, your inner economists should be quite fascinated, right? We're going to get a real-world experiment here. Now, the reason last week I suggested that the Aluminum Association may have had influence on Trump is because of what I just saw in this CNBC headline from the Ford CEO. Ford CEO says Trump tariffs are causing, quote, chaos, end quote, in auto industry. President Donald Trump's tariffs, both implemented and just threatened, are causing chaos for the U.S. automotive industry, according to Ford Motor CEO Jim Farley. The chief executive of America's second largest automaker described 25% tariffs on steel and aluminum, as well as threatened levies of the same amount on Mexico and Canada, as currently adding, quote, a lot of cost and a lot of chaos, end quote, to the industry. Indeed. I mean, if you're putting yourself in Jim Farley, the CEO of Ford Motor Company's shoes, One imagines that your biggest concern right now is offering competitive pricing with the biggest threat being BYD, right? I mean, aren't you? I imagine that's probably a near top of mind concern. How do we keep our costs down so that we can create a car that is competitive with BYD in terms of costs? Because that is the new meta, so to speak, in the automotive industry. So again, I don't know how this helps. I don't know how this helps you keep costs down. I don't know how this helps you make cheaper cars. And frankly, I don't know how much longer Western consumers are going to tolerate buying, overly expensive cars. It doesn't seem like something that's going to be super popular in the long term. As much as people want to support locals, at the end of the day, as they always say, price is king, and the consumer ultimately wants the cheapest cost of their vehicles. So here is Farley, quote, President Trump has talked a lot about making our U.S. auto industry stronger, bringing more production here, more innovation in the U.S., and if his administration can achieve that, it would be one of the most signature accomplishments. So far, what we're seeing is a lot of cost and a lot of chaos, end quote. Farley and incoming Ford CFO Sherry House said a majority of the company's steel and aluminum are domestically sourced. However, there are suppliers to the automaker that source such materials from outside of the country, which could have an impact on costs. And exactly, it's not just about the cost of the metal, it's the cost of having to plan everything from their perspective, because they can't just say, well, we'll pay whatever it is. Like if they figure out that it's cheaper to get it, somewhere inside the United States, like they have to do that research, right? Like that's a big decision. All of that intelligence, so to speak, that costs money, right? So it's not even just about the cost of the aluminum or the steel, I might add. It's also the chaos that comes with it that is expensive. So Sherry House said the biggest concern for the company is all of these actions that appear relatively minimal, including on suppliers, combining to negatively impact the automaker's business. Quote, we'll have to deal with it. That's what I'm talking about. Cost of chaos. A little here, a little there. That is what we're dealing with right now, end quote, Farley said. Farley seemed most concerned about potential duties on goods from Mexico and the U.S., saying a long-term 25% tariff that could go into effect as soon as March 1st would be, quote, devastating, end quote, and, quote, blow a hole in the U.S. industry that we've never seen, end quote. Farley said he is traveling Wednesday to Washington, D.C. for the second time in 3 weeks to meet with government officials, including members of Congress, to stress how the policy uncertainty is impacting the industry. So Ford not happy with what they're calling the chaos. Another interesting result here, amid U.S. tariff threat, British Columbia to fast-track 18 mining and energy projects worth $20 billion. This is the National Post. So it's another interesting aspect of this. To a certain degree, one could argue this has been a shock to the system of the Canadian economy, to the mentality, to the sleepiness, so to speak. And it's quite interesting. I mean, fast-track 18 mining and energy projects. The list includes mining projects that have been criticized by some First Nation groups in BC and Alaska, and an LNG project opposed by some environmentalists. And just a couple of paragraphs here, the British Columbia government has released a list of 18 critical mineral and energy projects worth roughly $20 billion that it said it's working to accelerate in the face of ongoing tariff threats from the United States. What the government called the, quote, initial list, end quote, is made up of projects that already have developed business cases but still need some type of permit or approval from government. Its release comes after Premier David Eby said on Monday that the government was expediting some projects to diversify the economy, assuming there would be, quote, 4 years of continual on and off tariff threats, end quote, from the United States under the presidency of Donald Trump. I remember President Trump's first term, and it had a reputation of being chaotic, but it didn't really have the same kind of volatility, shall we say. There was uncertainty, but it feels like it's kind of at another level here, interestingly. So again, we'll see what happens here. And here's more fallout on the tariff threat, this time in regard to China. Tungsten miner says clients in shock as China chokes supply. I could have opened the program with this. And again, what's at the heart of all of these discussions here? What is at the heart of this, probably the biggest story in the world right now, tariffs, right? I mean, what's at the heart of it right now? It's our bread and butter here. It's steel and aluminum. It's natural resources. So again, we can comfort ourselves. Neil Woodyer was calling it a remarkably small, tight-knit industry on last week's show, but you see how important it is. So this is Bloomberg News via mining.com. Wait till you hear this. The phone has been ringing off the hook for Louis Black after China imposed export controls on tungsten, a niche metal mined by his firm that's crucial to weapons manufacturing. The chief executive officer of North America's Almonte Industries said his customers are in a, quote, state of disbelief, end quote, following Beijing's move on Tuesday, one of a suite of measures announced as a response to tariffs placed on Chinese goods by the Trump administration. China accounts for more than 80% of the world's tungsten output, and there are concerns that the government could add measures around tungsten scrap that would further constrict its availability. Almonte's stock in Toronto has soared 41% over the last 2 days as investors price in scarcer supply of the super-dense material used in armor-piercing munitions, as well as for engine parts and chip making. This brings about a whole other issue. China has really focused on the super heavy, durable materials. And as I mentioned in the talk I gave at the Vancouver Resource Investment Conference, over history, the more durable the material, basically the sharper it stays, the more protection it gives you. Basically, the harder the materials you have, the greater your weapons can be. In a sense, it's another way of saying strong. It's stronger materials is another way of thinking about this. So what Beijing seems to be doing, it seems to me, is a double move. And I would argue it's doing it under the pretense, even, of economic response to tariffs. They are diminishing the supply of essential military materials. So it has a military component, but it's being done under the justification of a response to tariffs, interestingly. And Louis Black is quoted again here, quote, "It's the warning shot because we cannot exist without it. Our economy, manufacturing, defense, everything is so dependent on it. And yet Russia, China, and North Korea have about 90% of the output," end quote. Again, referring to tungsten. And you see the chart here. I mean, this is on mining.com. And you see China is top supplier of tungsten with 67,000 tons. The next largest is 3,400 tons from Vietnam. And then it's 2,000. Again, it's probably the next 20 countries combined don't even make up, China's amount. I mean, they have 80%. Final point on this, China has banned imports of tungsten scrap for a number of years, citing environmental concerns over how it's processed. If it were to lift the embargo, it could suck in more supply and limit what's left for other countries. That would create a, quote, situation where it's very difficult for my customers to compete with China, end quote. He continues, quote, "The question is, how much will China tighten the screw to be heard? I think the news was bad, but I think it's going to get worse," end quote. So what Louis Black is saying is that's not even the end of it. Not only could they restrict the exports or even outright ban them, as they have with germanium and gallium and antimony, but they could take it a step further and say, hey, we'll take everybody's tungsten scrap, because right now they're not taking it for environmental reasons. At least that is the story. And we have one more quote, this time from Guardian Metal Resources CEO Oliver Friesen. Quote, "It's such a critical time right now, and really the U.S. needs a domestic source," end quote. He continued, quote, "We do believe we are in a strong position ultimately at some point to receive some type of funding to support the development of our projects," end quote. I call it a Sputnik moment here, with what is going on with metals processing in China. They dominate almost, if not every metal. I don't know what metal they don't dominate in terms of the processing. And the processing is the choke point. That is where all the leverage is. Now, it sounds like Guardian Metal Resources is waiting for support. And to the U.S. government's credit, don't forget this headline from December 13th, 2024. Department of Defense makes investment to strengthen the tungsten supply chain. And this is December 13th, 2024. The DoD announced today a $15.8 million award to Canadian company Fireweed Metals via the Office of the Assistant Secretary of Defense for Industrial Base Policy's Defense Production Act Purchases Office. The objective of this award is to accelerate the development of a tungsten mine at the Mactung site in the Yukon, Canada, which is one of the world's largest undeveloped high-grade deposits of tungsten. So you see the importance here. And you do wonder, again, if all of a sudden Canada has to put on a 25% tariff in response to American tariffs, it all sounds very expensive, doesn't it? But, I mean, maybe there's a method to the madness here. Like, I'm ready to have an open mind here. Again, I guess we'll find out. Let's continue. Korea Zinc secures critical metals supply chain amid global export controls. So this was a press release put out by Korea Zinc. Now, we've been following Korea Zinc pretty closely here the last few weeks. The world's biggest zinc smelter, which is not controlled by China, so a major asset here. Again, the world's biggest zinc smelter. And they actually have important other metals they export. So let's take a quick look here. This is out of Seoul, South Korea, February 6th. And this is, again, a press release from Korea Zinc. As U.S.-China trade tensions escalate into export controls on rare metals, Korea Zinc's role in maintaining supply chain stability for critical minerals has gained further strategic importance. On February 4th, China announced that it would be immediately implementing export controls on 5 key metals, namely tungsten, molybdenum, indium, bismuth, and tellurium, used for defense, clean energy, and in several other industries, just minutes after President Donald Trump's additional 10% tariff on Chinese goods came into effect. The rising tensions have highlighted the importance of establishing a more resilient supply chain for critical metals. Korea Zinc is South Korea's sole producer of indium, bismuth, and tellurium, which make up 3 of the 5 metals subject to export controls, has found itself in a unique position to address these concerns. Korea Zinc annually produces 150 tons of indium, which makes up about 11% of total global demand of 1,400 tons. Indium is highly sought after as it is used in a wide variety of alloys such as indium tin oxide for monitors and touch screens and other uses such as solar panels and LEDs. The smelter also annually produces 900 to 1,000 tons of bismuth and 100 to 200 tons of tellurium. In addition to these metals, Korea Zinc annually produces an approximate total of 120 million tons of 10 or more non-ferrous metals. The company produces these rare metals by extracting them with its leading proprietary technology during the smelting process of zinc and lead concentrates sourced from global mines. A Korea Zinc spokesman stated, quote, "Given that some critical metals are produced by only a few countries, Korea Zinc's role in establishing a more stable supply chain is crucial. We continue to provide stable supply to domestic industries despite global shortages. Korea Zinc has anticipated the importance of global rare metals and has consistently increased production." So, interesting statement by Korea Zinc. Now, just on that, there was another story that came out, this time from the Korea Herald, and it says there's no winner in destructive fight because, of course, this smelter, this incredibly strategic smelter that we were just hearing a press release from, is under a major battle for control over. And so the Korea Herald weighs in, prolonged dispute over control of Korea Zinc turns into game of chicken at cost of industrial competitiveness. The fight for management control over Korea Zinc has been long, nasty, and expensive, more so than any party to the dispute could have imagined. Korea Zinc has been quietly expanding its market presence as a hidden champion, the world's #1 non-ferrous metal smelting company, producing the largest quantities of 4 metals: zinc, lead, silver, and indium. It also makes several rare metals, including antimony, indium, tellurium, and cadmium, which are considered critical metals. If not for the takeover attempt by its largest shareholder and estranged business partner, Yongpung, Korea Zinc would be thriving amid the unprecedented need for stable supply chains of key minerals, as the trade war between the United States and China has escalated into export controls on rare minerals. And scrolling down a bit, Korea Zinc, after successfully defending its management control at the extraordinary shareholders meeting on January 23rd, extended an olive branch to the Yongpung MBK alliance. MBK is the private equity firm that has partnered with Yongpung in order to try and take over the company. Quote, "Korea Zinc is in a national key industry and is an asset to Korea. It is time to forget the past for a moment and find a reasonable plan for everyone," end quote, said Park Ki-deok, president and co-CEO of Korea Zinc. Park expressed aversion to a prolonged war of attrition. Quote, "If MBK wishes, we will also open the way for participation in management. We believe that MBK's know-how and wisdom accumulated as the largest private equity fund in Northeast Asia will be helpful to Korea Zinc," end quote. Now, Yongpung And MBK replied in a statement on February 5th, quote, "Dialogue and compromise are possible only when there's a minimum level of respect for the other party, but Korea Zinc chairman Choi Young-byum has completely ignored the majority shareholders who account for nearly half the ownership." So it just continues here. In a sense, it's another example of, what you might call chaos not helping the economy. As it finally says here in this article by Park Han-na at the Korea Herald, last week, some 2,600 small and medium-sized enterprises expressed concern over abusive litigation lodged by MBK and the Youngpung against Korea Zinc and called for an end to the dispute, which has hurt Korea Zinc's partners, contractors, and other related companies. So coming up, we have a fabulous report by Henry Lazenby on Mining Indaba, the African Mining Conference, which happened from February 9th to 12th in Cape Town. Northern Miner Western editor Henry Lazenby attended, and so we get his full report on the conference and really the excitement that is going on in the resources industry with all of the attention it's getting. And also for this week's Spotlight, we have Neil Alberts, General Manager, BME Mining Canada, who discusses some of the products that BME is putting out in Canada and how they hope that these initiatives will help support the North American supply chain and really just give resilience and more options to mining companies in North America, a more resilient and sustainable supply chain. So Neil Alberts, General Manager of BME Mining Canada, coming up in this week's Spotlight. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner. Find us on Instagram at The Northern Miner and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to Neil Alberts, General Manager, BME Mining Canada, for this week's Spotlight. Joining us today, I'm very pleased to welcome to the Northern Miner podcast for the first time, Neil Alberts, General Manager of BME Mining Canada. Neil, welcome to the show.
Adrian, good morning, and thank you very much for inviting me. It's an absolute pleasure being here.
Well, it's wonderful to have you here, Neil. You're working on so many interesting aspects of the mining industry with BME. So for those that are unfamiliar with BME, could you give us a little bit of background on the company and what you guys are up to?
Yes, sure. So BME Mining Canada is a relatively young, established joint venture here in Sudbury in the province of Ontario. We're part of BME South Africa, who is also part of the Johannesburg Stock Exchange listed Omnia Group. Through over 40 years of industry experience, we've established strong presence in regions, particularly such as Africa and Australia and Indonesia, and now we've expanded our territory into Canada as well. Within the BME mining space, we have two divisions. One is the BME Blasting Solutions, which is focused on explosives and providing initiating systems to mining clients, whether it's in quarrying, construction, or underground and surface mining. And our second division is BME Metallurgy, offering mining chemicals and metallurgical processing, which combines with our long-standing cutting-edge technology to provide a value chain to mining customers in Canada.
Well, it's such a huge issue, especially mining processing. It's such a huge opportunity, actually, I would describe it as. And you also work with blasting as well. So maybe just go a little bit more into details. So, when I think blasting, I think of dynamite. How will miners benefit, in a sense, by, say, using BME blasting solutions?
So we've taken a very strategic approach to our business here in Canada and how we create this value for our mining clients. We've invested quite heavily in being able to establish our manufacturing capability outside of Sudbury for the explosives and initiating systems solutions. That being said, outside of Sudbury at the Narran Centre, we have a manufacturing hub where we produce emulsion explosives for various applications, both in surface and underground mining. That is our Innovex underground emulsion and surface range of product. And then we also have a initiating systems manufacturing component at this manufacturing center. It's the first initiating systems manufacturing infrastructure in Canada in over 30 years. In the heart of Ontario, in the heart of the mining province, where we're very close to large and the smaller tier 1, 2, 3 mining houses. And we've strategically placed ourselves to be able to add value through supply security and obviously cost-saving initiatives through not just our initiating and explosive systems, but also through providing a whole blasting solutions package to customers.
Okay, excellent. So you mentioned metallurgy. Is that also involved in the blasting aspect, or is that a separate aspect of the Nairn facility?
Right now, it's a separate aspect of the Nairn facility. The Nairn facility will focus in the near future purely on manufacturing explosives and initiating systems. Our metallurgy division will exponentially grow over the next period to include the supply of mining chemicals into our region, as well as metallurgical processing, consultation services, and value creating initiatives. So it's kind of at the back end of our blasting process. So we'll manufacture the explosive and initiating systems to do the actual blasting process with miners to actually mine the ore. But then from a processing perspective, we provide that service as well. So we come full circle in the mining space.
And so you mentioned the supply chain. How is this working for the supply chain? How is it securing the supply chain, say, in North America?
We've built in sufficient redundancy into our manufacturing capacity to be able to ensure that we have a supply security of our initiating systems and our bulk emulsion product range. Our location is of such a nature that we can very easily reach most of the mining communities and mining operations in this area. Being located outside of Sudbury and with the built in or factored in redundancy in terms of manufacturing capacity, we are able to ensure that there's a consistent, secure supply of finished goods to our customers, but also with our partners from a supply chain perspective globally, we're sourcing our materials from. If you combine the fact that we're able to secure supply of raw materials and produce finished goods at a consistent, secure rate, we are able to ensure our mining customers are leveraging off our limited or delimited risk in terms of supply security. And that translates into some form of a monetary value or cost saving initiative. Our location is also such that there are extreme savings in terms of logistics, in terms of import cost, if materials have to be imported. So we take a lot of risk in that. And that is what makes BME Blasting Solutions, stand out and be able to offer that from a supply security, a cost saving perspective to any size mining operation.
Okay, very interesting. And there's also a sustainability aspect to what you guys are working on here. Could you tell me a little bit about the environmental side of things?
Yes, surely. Omnia Group, our holding group, as well as our partners and different divisions within the Omnia Group, BME, whether it be South Africa, Australia, Indonesia, the African continent, as well as BME Mining Canada, walks and talks the values of the Omnia Group, which says, let's create a greener and safer future for all. We take safety, social responsibility, and governance extremely serious. We understand that our product has a fit for purpose proposition and from cradle to grave. To take our sustainability initiatives further and to show our commitment to market, we've recently partnered with a company in Sweden called Hypex Bio. And we are using a developed technology and continue to develop a technology with them, which is a hydrogen peroxide based emulsion. And that manufacturing capacity will also be available in Sudbury by the end of this year, allowing us now to demonstrate our commitment to the environment, to planet, to people, to communities through less air pollutants, less aqueous pollutants in water, less NOx fumes created, carbon monoxide for underground mines. We are at the forefront right now of a groundbreaking technology. And that speaks to the values of Omnia, that speaks to the values of BME. And that will most likely and most definitely we've seen, it speaks to the values of large mining houses who have this commitment and who've signed the commitment, the COP26 initiatives to be emission free by 2050. We understand that this groundbreaking technology is the first in North America. It will be in Sudbury. It will be available to the mining customers in Canada. Our partners in other continents or countries are growing rapidly. The uptake of this in Sweden and in Europe has been incredible. So we are very serious about our sustainability. We understand that our product shouldn't just be a solution, but it's the communities we engage with. It's the mining customers we engage with. It's the stakeholders that we engage with. We're not a contractor. We're a partner, and we certainly take sustainability very seriously. And our Hypex Bio hydrogen peroxide emulsion initiative is going to be absolutely record breaking.
Okay, fascinating. So as we wrap up here, Neil, put it all together for us. What ultimately do you want people to know in a few sentences? What do you want people to know about BME and what you're doing here?
If you're serious about blasting solutions and the whole value chain of drill and blast, including a very, very serious component of sustainability of environmental factors, BME Mining Canada has a solution for you. If you're serious about cost saving initiatives, if you're serious about quality and health and safety, not just for employees, but also for communities that we operate in and that you operate in, BME Mining Canada has a solution for you. We're extremely customer centric. We have very well established manufacturing facility now. We are very excited about our sustainability projects that's going to be launched in Sudbury and really put Sudbury on the map as a hub for sustainability initiative. BME Mining Canada can provide you more than blasting solutions, more than metallurgy solutions. We're a long time and a lifetime partner.
Finally, if people want to learn more, if they're interested in what they heard here, what should they do?
Please visit our website, bme.co.za. There's contact details on the website. You can send an email to info@bmemc.ca, and we will be in contact with you. Alternatively, you can look us up in the local telephone guides for Sudbury or on Google. And please do make contact with us. We're more than eager to assist and help.
Neil Alberts, General Manager, BME Mining Canada, thank you for joining us and sharing all the interesting things you're working on at BME Canada.
Adrian, thank you, and thank you for having me.
And thank you once again to BME Canada for sponsoring this week's Spotlight. Turning to the website, Nippon Steel considering bold revision to U.S. steel buyout, government spokesperson says. So Trump continuing to be at the center of what seems like every news story here. This is Reuters via Mining.com. Japan's Nippon Steel is considering proposing a bold change in plan from its previous approach to buy U.S. steel. Chief Cabinet Secretary Yoshimasa Hayashi said on Monday, though the company declined to comment. Quote, "We are aware that Nippon Steel is not looking at this as a mere acquisition, but is considering a bold proposal that is completely different from anything it has done in the past," end quote, Hayashi told reporters. I mean, when you read up close about this deal, it seemed like it was in the best interest of U.S. Steel and Nippon Steel to make this merger of sorts, or this acquisition, however you want to put it. And the real kind of stumbling block was the fact that it was called U.S. Steel, and that the company really was a bit of a, icon of American industry, which really didn't fit well with the political narrative. So one wonders what we're witnessing here. It seems to me, my read on it is, frankly, the semantics are changing. It's almost like they're trying to get the deal done, but they have to change the semantics, is kind of how it looks here. Let's continue. Hayashi said it would create a win-win situation for both Japan and the U.S. through significant investments in the production of high-quality products demanded by the U.S. and global markets. On Friday, U.S. President Donald Trump said Nippon Steel's $15 billion bid for U.S. Steel would take the form of an investment instead of a purchase. Two people familiar with the matter said the biggest Japanese steelmaker had not withdrawn its bid. On Friday, Nippon Steel declined to comment on Hayashi's comment, as well as Trump's latest statement that no one can have a majority stake in U.S. Steel. Trump made the comment on Sunday when speaking to reporters on Air Force One. He also said the U.S. will impose 25% tariffs on all steel and aluminum imports on top of existing duties, and that he will announce the new metal tariffs on Monday. So an investment rather than an acquisition. Continuing on, U.S. copper price premium soars to record after Trump tariff moves. This is Reuters via Mining.com. The price of copper in the United States rocketed on Monday after U.S. President Donald Trump pushed forward his plans to slap tariffs on industrial metals. The premium of U.S. COMEX copper futures HGC2 over those traded on the London Metal Exchange surged to a record of $920 per metric ton, up from $558 on Friday. So the premium rose to $920 from $558, so basically almost doubled the premium. Trump was expected later on Monday to slap new 25% tariffs on all steel and aluminum imports, on top of existing metals duties, in another major escalation of his shakeup of trade policy. Last week, Trump said he also planned to impose tariffs on copper without giving details. Since Trump became president, COMEX copper has traded at a premium to the LME, ranging from around $250 to $500 as investors sought to price in the impact of potential tariffs. So interesting moves there. Continuing on, financial industry group raises concern on LME's OTC trade plans. This is Reuters via mining.com. And we've been following the LME and have had all sorts of questions along the way over the months. Two financial industry groups have raised concerns with the London Metal Exchange, or LME, about its plans to require private deals between members and clients to be carried out on its own platform, 5 sources with knowledge of the matter said. The LME wants its members to transact in so-called over-the-counter trades of up to 10 lots, equivalent to 250 metric tons of copper, for example, on its Select trading system. It also wants them to hedge such trades on Select. This contrasts with COMEX, which is part of the US-based CME group and offers copper, aluminum, and other metal contracts. COMEX does not require its members to carry out OTC trades on its system. The Futures Industry Association and the Association for Financial Markets in Europe sent a joint letter to the LME laying out members' concerns in December. This unusual step followed a meeting with LME members who would normally raise objections and concerns via working groups. So, it's very technical what the concern is, but it seems like there are a lot of people who are unhappy about what the LME is doing here. The LME brokers typically complain about revenue-raising moves such as trading and clearing fee hikes and costs of other requirements such as reporting OTC trades. And here's a quote from the AFME and FIA, who said in a response to a request for comment, quote, "We recognize the LME's ongoing efforts to enhance transparency and market structure and are engaging constructively with them on relevant proposals." 3 of the sources said LME members had also raised the issue with Britain's Financial Conduct Authority. The watchdog declined to comment on this and whether it had been consulted about the LME's plans. The LME said in a response to a request for comment, quote, "We are confident that the planned measures will lead to better outcomes for the market as a whole." And it also said, quote, "We expect the changes will require some of our members to adapt their business models. Full details of the measures will be put forward and formally consulted on in the first half of 2025, end quote. So it sounds like traders are unhappy with this over-the-counter way of transacting. As it finally says here, LME members also want to know how the 10-lot number was determined. They are worried it will not stop there and that the exchange will keep raising the limit to draw in more OTC trades. A proposal that OTC contracts amounting to less than 10 lots using LME prices must be hedged on its own electronic system has led some to suggest that the LME is trying to ban brokers and banks from netting their buy and sell orders internally and stop them from hedging on other exchanges such as COMEX. So a very technical article there, but you know why I bring it up here? Because usually I kind of, shy away from articles that are this technical. I get concerned we lose people. But to me, the important takeaway here is part of a pattern of concern for the management of the LME, which, don't forget, is owned by Hong Kong Exchanges and Clearing. Like, remember when all of a sudden they're just going to start listing a bunch of metals in, I believe it was Shanghai, and that the way that they announced that information, which is the way they did it the year before, was on the sidelines of Davos to a Reuters reporter, as if they're just mentioning something casually instead of putting out a full press release with the rationale and the justification. It just raises a lot of questions, and it's interesting. This is a very technical article on, these over-the-counter trades, but it seems like other people have questions about other things that the LME is doing. So it's quite interesting. And just a few headlines. Mali gold production plunges 23% in 2024. This is Reuters via mining.com. Mali's industrial gold production plunged 23% to 51 metric tons last year from 66.5 in 2023. The West African country's mines ministry said. A ministry document showed on Friday that the output number excludes Barrick Gold's December production following the company's dispute with Mali's military-led government relating to a mining law introduced in 2023. Now, apparently they are still negotiating, so we'll see if anything comes of that. Another headline, copper production from Chile rose nearly 5% last year, and that's an article from Reuters via Mining.com. Copper output from Chile, the metal's top global producer, rose 4.9% to reach 5.5 million metric tons last year, according to data from Copper Commission Cochilco released on Friday. So Chile managing to get its copper output higher, it's a big deal out there. And this was super interesting video on Mining.com. Trump tariffs will boost Chinese imports. And so John Jacobs, a critical minerals expert at the Bipartisan Policy Center, which I believe is a think tank, is really saying something we've been saying here for quite a while, which is the real choke point is in the processing. And that really what the West needs to do is to provide equivalent processing in North America or in the West, and that is the only real way to compete. So putting tariffs, say, on Canada and Mexico or Europe is not going to help you compete on price. So yeah, very interesting interview with Mining.com's Devin Murrigan. That's on the Mining.com website. Tariffs on allies will boost Chinese imports, says Bipartisan Policy Center. And final headline, Indonesia Trade Ministry supports extending Freeport's copper export permit. So there was a question on whether Freeport Indonesia would be able to keep exporting its copper concentrate. They needed permission because the government of Indonesia wants them to process it locally, but the processing facility is still under construction. So they had to get permission, and it looks like they got it. So very interesting there. Those are your news stories. Now let's take a look at metal prices. Let's turn to the bond market for context. The U.S. 10-year bond is yielding 4.53%. That is down 0.05% on the week. The UK 10-year gilt is yielding 4.51%. That is down 0.03% on the week. The Italy 10-year bond is yielding 3.53%. That is down 0.01% on the week. The German 10-year Bund is yielding 2.43%. That is up 0.01%. And the real standout, once again, is the Japanese 10-year bond, which is now yielding 1.32%. That is up 0.04% on the week. And again, it seems to be relentlessly climbing here since we started tracking it 3 months ago when it was only 0.97%, now at 1.32%. Turning to precious metals, gold is trading at $2,932.90 per ounce. That is $88 higher than last week. Silver is trading at $32.35 per ounce. That is down 3 cents on the week. Platinum is trading at $1,024.80 per ounce. That is $35 higher than last week. And palladium is trading at $1,001 even, and that is down $39 on the week. So precious metals higher, except for palladium, which is taking a break after a pretty big jump last week. Turning to industrial metals, copper is trading at $4.69 per pound. That is up 39 cents on the week. And as we learned in the news, likely on tariff discussion, iron ore is trading at $106.37 per metric ton. That is up $5 on the week. Aluminum is higher at $1.21 per pound. That is 2 cents higher than last week. Lead is also higher at 91 cents per pound. That is 3 cents higher than last week. Nickel is back above $7 at $7.04 per pound. That is 15 cents higher than last week. Tin is above $14 at $14.11 per pound. That is 46 cents higher than last week. And cobalt is unchanged at $9.78 per pound. Lithium is slightly lower at $10.56 per kilogram. That is 18 cents lower than last week. Uranium is back below $70 at $69.65 per pound. That is down $2 on the week. And zinc is slightly higher at $1.29 per pound. That is up 2 cents since last week. So zooming out, it seems to me that precious metals, except for palladium, quite strong, especially gold, the real standout there. Industrial metals generally edging higher, particularly copper, which is up significantly on the week. Most industrial metals higher, with the exception of lithium and cobalt, as well as uranium, which is below $70 per pound, interestingly, but otherwise industrial metals stronger. So if we're looking for cause, we're kind of back to this, tariff discussion and maybe a looming sense of inflation, one wonders, in the pipeline. And those are your metal prices. Coming up, I'm very pleased to welcome Northern Miner Western editor Henry Lazenby to talk about Mining Indaba, the massive mining conference that takes place in Cape Town in South Africa from February 9th to February 12th. Henry has been there several times, and he went this year. So he gives us an update, as well as a comparing and contrasting with PDAC, and all sorts of thoughts around the sentiment. Fascinating conversation. I hope you enjoy it, and I will see you on the other side. Joining us today, I'm very pleased to welcome back to the Northern Miner podcast, Henry Lazenby, Western editor for the Northern Miner, who is at South Africa Mining Indaba. Henry, welcome to the show.
Hi, Adrian. Thanks for having me back. It's always a pleasure.
Indeed, it's always a pleasure to have you on, Henry. A lot of the audience loves to hear what you have to say, and here you are. Are you in Cape Town right now as we speak?
Yeah, I left Cape Town yesterday, which was Wednesday afternoon, late for a travel back. I'm enjoying some of the African bushveld here in Gauteng as well. So my reporting from Indaba has ended yesterday, but I've got all the info for you up to then.
Okay, excellent. So just as we kind of open that up, maybe for those that don't know about Mining Indaba or are new to hearing about it, have you been to the conference before? And what is the conference? Is it the largest mining conference, say, in Africa or even on a bigger scale? Describe the conference for us if you can.
Mm-hmm. Yes, in my view, the investing in African mining Indaba has grown in stature over the past more than a decade that it's been going to, in my view, at least become the second biggest mining conference globally. It's really major. I don't have specific attendance figures at hand at the moment, but there certainly were thousands. And just gauging by halls being jam-packed full with only standing room left, the conference was certainly well attended. And I could tell by a broad section of African policymakers, dignitaries, and investors themselves, and of course the private sector looking for investment and opportunities. I think the PDAC in Toronto, in my mind, ranks as the top conference globally for mining at this stage. But yes, the Cape Town conference certainly is the venue and the largest in Africa. Just gauging from local news reports, it certainly made headlines and is being positioned as Africa's premier mining conference.
Okay, excellent. We're not used to this kind of attention, when you say standing room only here in the mining sector. So it does show how things have changed. And is that your sense too? Like you've been to previous ones. Like, would you say it's different from previous ones?
Yes, this is my third Indaba that I've attended, although I have to caveat that by saying I've attended sporadically about every 2 or 3 years over the past several years. So I don't have a fully fluent take on how the Indaba has progressed over the years, but certainly to my mind, it has grown. This is the fullest I've seen ever. And I think it flows through from what I experienced in Vancouver in January as well. The Vancouver Resource Investment Conference and the AME's Roundup event were just as well attended. Many of the keynote speakers, their halls were also fully packed and only standing room, even not any more standing room available. So I'm thinking that this must surely be pointing towards the general public and investment community waking up to a renewed urgency to get involved with mining. I think, very broadly speaking, the general idea that everything our modern world requires, technology, even just construction materials, it all starts with mining. And so the idea that mining is the first critical building block of any economy is starting to, again, take hold on a much broader scale, to my mind. And I think these kind of anecdotal points surely is evidence of that.
Interesting. And I would echo actually what you're saying about Vancouver Resource Investment Conference. And it was the first time I went to both that and Roundup, but I was taken aback that it was, again, a standing room only when I was attending, the main speakers. So super interesting. And just finally on the, maybe comparison here, like how is Indaba different from PDAC in terms of just the overall just feel? Like I would imagine it feels less North American centric. Like does it feel more international to a certain degree, or are they both kind of a similar feeling? Like how are they different?
Yes, I would say it's an easy one to answer. It certainly has a much more international feel to it, especially just given African delegations being present. Also, strong representation from the Middle East, from Saudi Arabia, Ethiopia, all these other emerging mining areas in Africa. The Western Africa component strongly represented during the conference.
And just finally on that, while we're on the topic, you mentioned West Africa. Did anybody talk about the, so-called coup belt, as the Financial Times is calling it, or these kind of issues that they're having with these military juntas and, say, Barrick, for example, and Resolute Mining, say, in Mali? Did that ever come up, or was that kind of glossed over?
Yes, Barrick CEO Mark Bristow was there. Unfortunately, I didn't get to have FaceTime with him this time, but he did make remarks that Barrick continues to work with Mali to find a workable solution to end the issues that they are dealing with there. I unfortunately don't have further insight to share regarding that matter since I didn't interact with any of the affected parties there, given my short time there at Indaba.
Right. And you wrote a couple of articles that I highly recommend people go to the Northern Miner website to read. So tell us about the conference itself. What was the big theme? Like, what were people talking about? Was there a focus at all at the conference?
Yes, for sure. So the theme was future-proofing African mining today. And so a lot of the conversation revolves around what bargaining chips Africa has when it comes to negotiating its place in the global supply chain, especially in the context of the energy transition. It was off the bat said by South Africa's mining and petroleum minister, Gwede Mantashe, that Africa has the critical minerals that the globalized Western world wants. But in the face of aggressive rhetoric emanating from the US under the Trump administration, they were quick to point out that we have the minerals they want, and if they are going to bully us by withholding funding and by diverging from established policy and norms, then we simply must keep the minerals for ourselves in Africa and beneficiate it on African soil. A lot of the conversations centered around the beneficiation question and how miners can integrate into fully integrated supply chains to feed into the energy transition. Now, that being said, there are several key immediate hurdles to getting that done. First of all, miners were pushing back from against policymakers asserting that it's miners' responsibility to uplift communities and create infrastructure for them to actually be able to operate profitably. And the miners were pushing back, saying it's not their core function to beneficiate. Their core business is to mine and to explore. And so that is seen as a major impediment to profitable business in Africa and specifically South Africa at the moment. That combined with regulatory reforms needed, the unreliable electricity provision in South Africa, and scarce capital that are trying to enter South Africa amid business constraining policy measures, which ostensibly were created to serve the people, but really is not creating a safe environment for capital.
And of course, for those that are wondering, beneficiation is basically minerals processing, right? Doing
Value
things.
adding. Yes, it's to add the value to the minerals. Look, Africa has a very sad colonial past where most of the infrastructure built was purely serving to export raw minerals like iron ore, copper concentrates, even gold concentrates away from African soil to other countries where they can be value added and transformed into usable products. So the big thrust in Africa at the moment is to repatriate these supply chains back to African soil and sell value-added products to the outside world, instead perhaps of the current status quo where perhaps PGMs are shipped out to Europe where they're transformed into catalytic converters and then shipped back to South Africa to be included in the auto manufacturing sector, only to be exported out again further down the supply chain. So it's about reshoring production, adding value. There was an interesting report that was recently released by South Africa's Mineral and Mineralogy Research Council, MINTEC, which estimated South Africa's mineral wealth in the area of 2.5 trillion rands, which essentially equates to US about $140 billion. It seems like a trivial number, but it really could move the needle in uplifting communities and the general society in Africa.
Indeed. And one imagines you could probably just go with the Congo and say that's worth $140 billion, back of the napkin assumptions here. So, okay, interesting. I mean, you mentioned the mining minister, Gwede Mantashe, out of South Africa. Like, I think I saw 3 or 4 different articles, a couple by you, but then I opened a Bloomberg article. He was very quotable, wasn't he? He seemed to,
Yes.
I don't know if I'd say he stole the show, but is that your sense? Like, tell us about some of the speakers.
Yeah, Mantashe certainly made impact with the opening address, also urging African countries to define for themselves what critical minerals really mean and not necessarily pandering to the playbook of the developed North. For instance, he's saying in South Africa specifically, coal can be considered a critical mineral because that is the base fuel for electricity generation. It's the basic fuel for any of the downstream industrial processes. Coal in South Africa is critical, and he even hailed King Coal is back. So that's kind of an interesting perspective, meaning that the reality for miners and policymakers in Africa is quite different than what we are used to perhaps in the developed North/the West. Other speakers included the Mining Council of South Africa's chief executive, Mzila Mtinyane, who said that growing the mining sector is the absolute fundamental imperative in South Africa, because that's the conduit through which people will be uplifted, and that's the ultimate value creator in Africa. So the basic concept is that if Mintek says there is 2.5 trillion South African rands of raw minerals in the soil, then the multiplier effect of that amount could be assumed to be 10 times, 15 times. Because remember, in Africa, a single job, a working person, probably supports a family of, say, 5 to 7 plus. Then those jobs also generate supporting jobs, which could multiply another 10 times. So that really illustrates the power that mining potentially has to transform Africa's economies.
So, were there any policy recommendations then that they had in terms of how to go about fostering and developing these natural resources that are under the ground?
Yes. So the Mineral Council's Mzila Mtinyane outlined several demands the industry have of policymakers. One of the initiatives include overhauling the 2004 Mineral and Petroleum Resources Development Act, which has been shown by a recent review by industry think tanks Mining Dialogues 360 Degrees and Good Governance Africa to have been ineffective to really deliver the expected growth and transformation that South Africans have expected of it. Mintek's CEO Molefi Motuku also emphasized that South Africa controls 88% of global platinum group metals and 80% of the global manganese market. And this just shows the incredible bargaining power South Africa specifically has on the global stage. Yet the structural challenges keeps it from really taking its rightful place on the global stage at this stage.
You mentioned coal and king coal, and I just thought to myself, well, I wonder what Brussels would think of this. And so How did the conference and, say, the speakers and the overall conversation, how did it approach the whole environmental, it seems like ESG is morphing into sustainability recently, which I find interesting. First it was CSR, then it was ESG, and it seems to be morphing into sustainability. How is the whole, environmental conversation, so to speak, evolving, and what did you hear?
I think the best way to say is the crux is back on the social and the governance aspects of ESG, with governance being the correct policy needs to be in place to foster a safe environment for foreign capital to come and do its job properly, so that the private sector can make profits so that they can reinvest it in communities to uplift it. You cannot first uplift communities before a company has made a profit. And so that is a paradigm shift that I think is filtering through, especially here in South Africa. There was indeed a report recently released by South African bank ABSA, and I interviewed one of the executives there, Dean Hack, who was telling me that Western ESG standards could indeed be seen as a hindrance to African mining development. It is asking of miners and developers in Africa to invest and build projects to a much higher standard than what the local environment, milieu, calls for. For instance, as Mantashe said, in South Africa, coal is a critical mineral at this point, and thus, under westernized ESG standards, coal is a culprit. It's a bad news. It's a no-no. So there's that paradigm difference that is quite interesting to observe. Further to that, I have interacted with some other banks as well, and all are very keen to support sustainability-linked capital deployments via, for instance, offering debt instruments with variable coupon rates linked to measurable sustainability targets. Now, these can vary. They're quite subjective, but there are some international standards these banks do cite as creating the baseline, and then they'll go and create specific benchmarks and goals for the companies to meet to tailor their financing packages to those ends. Yeah, Chetan Jiva, one of the ABSA executives I also interacted with, said those adjustments to financing terms could entail 3 to 5 basis points differences to the interest they'll charge to these kind of loans. The ESG agenda is certainly expanding its focus beyond the E, and it's also incorporating that social investment and human capital components to foster a more sustainable and resilient industry.
Of course, artisanal mining seems to be a part of that social aspect of the ESG, and it's kind of a big thing, artisanal mining in, say, Peru, Colombia. I assume it came up at the conference. What are people saying about artisanal mining, small scale mining? Was there much discussion around it?
Yes, Adrian, this in fact is one of the most interesting aspects emerging from the Indaba for me personally. The aspect of artisanal and small scale miners. It's a huge, huge sector that is really overlooked, I think, by the mainstream, let's say, media and investment community. Some figures released by some of the NGOs and people I've interacted with show that about 45 million informal miners across 80 countries support about 270 million people globally. So again, it speaks to the multiplier effect of mining. But then also the other point that emerged is, why don't policymakers focus on the potential present that ASM embodies? When a major company decides a specific deposit does not meet its investment criteria, for instance, looking at Barrick or Newmont for their tier one assets, it doesn't mean that if it's not for them a fit, that the deposit is meaningless or that the minerals in the deposit has no value. Perhaps it's a better fit for a smaller operator to have a more nuanced and more focused operation to still make money out of that. So the core message emerging is that effective regulatory frameworks and strong anti-corruption measures are essential for incorporating ASM from an underground, essentially frowned upon and illegal criminal activity to a safe, investment-ready sector that complements the formal major mining sector. It has huge economical potential, as we've seen. Up to 270 million people globally can benefit from ASM.
It's super interesting. I almost wonder to myself, like, it's probably got ancient roots, this, small scale mining, because I think the paradigm seems to be shifting from a government point of view, speaking generically, as you point out, from something that is illegal to something that they probably just pragmatically feel they have to embrace because there's just too many people involved. And if you start clamping down too much, you're just going to get too much pushback. So you're better off, normalizing this, collect your taxes and, embracing it.
Yes, I liked one of the headline I wrote for this article really said it's from criminal to catalyst. And really that embodies the message. It's a huge opportunity and it's currently overlooked.
So as we wrap up, Henry, tell me about just the US and China. I mean, it seems like there is an ongoing kind of battle for Africa as we see, the Libido corridor on one hand, and then the railway to Tanzania from the Copper Belt. Did that come up much, or did you see evidence of this kind of battle for African resources?
I didn't particularly pick up any direct conflicts being mentioned between China and US. Of course, a lot of talk was ongoing about the tariff threats that the Trump administration has levied about a week ago, deferred on Canada and Mexico, but then also the threats about withholding funding for general health and well-being programs, long-standing funding programs for US health in Africa in order to extract concessions from African jurisdictions. There's a lot of anger and bitterness to that. And to that effect, on Chinese New Year, Pretoria, which is South Africa's capital, expelled Taiwan's ambassador and envoy. And the US saw that as a direct message to them, saying South Africa is firmly in the hand and camp of China and aligned to the Eastern BRICS League that's emerging as a strong challenge to the Western dominance. And so I think that's really to the extent what I witnessed any direct conflict visible on the exhibition floors. That being said, the focus really is about how to attract capital from whomever it comes by creating safe policy environments that protects capital and really ensures that capital can move freely in and out of jurisdictions. Obviously, there are deeper nuances to that about why capital is being offered perhaps by certain jurisdictions, which could ostensibly be argued is to gain future leverage on deposits and minerals and or to extract future concessions from African leaders. But it's a little bit to the sphere of conjecture and perhaps even conspiracy theory at this stage. But yeah, certainly a lot going, a lot of interesting aspects to that.
And just on the conflict in the Eastern Democratic Republic of Congo, was there any mention of that? How was it addressed, if at all?
Public speakers were very careful about making any public statements that essentially sticking out their necks, right? To make any statements that could inflame or, say anything controversial about what's happening in Lobito. Aside from, we witnessed several speakers were unable to attend because they were stuck in the DRC because of the situation. But unfortunately, there weren't a lot of analysis offered during the conference itself, partially due to the conflict being so fresh. Obviously, policymakers are extremely concerned and miners are highly on edge to monitor the situation. It's fast moving. There are more reports today that the rebels are still advancing and still actively fighting DRC forces. So the situation at the moment on the ground is pretty opaque, but it's worth monitoring very closely.
Indeed, all sorts of conflicting reports I'm noticing in the news wires. Okay, so finally, Henry, what is the big takeaway here now that you have finished attending the conference? What are your kind of big picture thoughts on what took place there and where this industry is heading?
Perhaps let me start my concluding thoughts by saying Eskom, South Africa's energy parastatal, actually had a run of 311 days of not having rolling blackouts occur to the South African economy. And then that was interrupted on the eve before Indaba started with blackouts hitting Cape Town, just as the world was arriving. So that was a little bit of an irony, but having almost a year without blackouts was a tremendous achievement for South Africa, given that it's been struggling for more than a decade with crippling blackouts, and asking miners and beneficiators like platinum refineries to essentially lower their output to help conserve electricity so that the entire grid does not collapse. That being said, the Indaba highlighted that regulatory reform, tailored ESG standards, formalizing ASM, and mitigating trade risks by boosting local beneficiation are all interlinked challenges and opportunities for the continent. Collaboration, I would say, is key. There was a clear message that governments, industry leaders, investors, and communities need to work together. For example, coordinated efforts by state-owned entities like Transnet, which is the South African rail operator, and Eskom, and then regulatory bodies and private sector financing models work together to achieve these mutual outcomes for prosperity. And then perhaps lastly, the speakers ranged from top executives to industry reform advocates and successful practitioners in the ASM sphere, and the diversity of voices really just reinforced that the future of African mining depends on a much more holistic, multi-stakeholder approach.
Henry Lazenby, Western editor for the Northern Miner, thank you for joining us and sharing your insights on the big mining conference in South Africa.
It's my pleasure. Thank you very much for having me. Baie dankie, ke a leboga.
Thank you once again to BME Canada for sponsoring this week's episode of the Northern Miner podcast. And thank you to Henry Lazenby for appearing as this week's special guest. And thank you, dear listener, for continuing to support this program. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends. And until next week, take care.